on the anniversary. So to dig into what led to these conditions that you're going to see plenty more about going forward, we are continuing a look back at Silver Squeeze, biggest moment in the history of finance. The Arcadia Silver Network. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Saturday, January 29th, 2022. Yes, amazingly enough, this is the 1-year anniversary of Silver Squeeze, the Silver Squeeze. Well, the thing is, none of those issues were ever resolved. And amazingly, they are actually flaring up on the anniversary. So to dig into what led to these conditions that you're going to see plenty more about going forward, we are continuing a look back at Silver Squeeze, biggest moment in the history of finance. The Arcadia Silver Network. All right, so here we are, everybody who's logging in to watch the replay. We're here to talk Inauguration Day, silver options, and other good stuff. We have a few more coming in, but perhaps to give an idea of what's possible, maybe this isn't really the best way to start this. I really don't want to get anyone in trouble. And again, by all means, I would not consider anything that we're talking about here tonight legal financial advice. I used to trade equity options. I did have a big position on in the move in 2011. It went great on the way up. It did not go so on the way down. By all means, speculative, highly risky. Done in the right context for the right person who understands the risks. I mean, it can be fun in its own right, but, please, this is very different from when we talk about, hey, if you have silver, you throw it somewhere, you leave it, and whether your kids are waiting, this is more if you like taking educated guesses or things like that. Let us kick it over to Option Land. By the way, good news, everybody. Silver back up on the day. It was down 44 cents. I was getting all your Twitter messages. Oh, it's going to get pounded. And, well, there, look, it's silver roaring back strongly. Up 8 cents here now. Oh, I thought this might make people smile. Good one from Ronan Manley. The inflation adjusted prices of gold and silver. We can read on your own time which one he uses, but the number will make you smile. Where is it? Somehow he comes up with $1,000 silver and some big number for gold. Well, what is this? Yes, you read that. Nearly 21,000 for spectacular January 1980 high. When adjusted for inflation, would be 20.9 thousand for gold, silver. Okay, here we go. David Smith, I see in there. An honor to have David Smith. David, before we get into some option fun, would you like to comment on this? I know your buddy David Morgan said 600 a while ago, but here, using the same shadow stats version of inflation, the real all-time high in the silver price is adjusted to an incredible $966 per ounce. Although if that's just matching in 1980, then I would still think, at least when you're thinking of what is the theoretical value, that's with 1980s debt load and monetary burdens. So that would still, David Smith. Is David Smith in the house? Does David Smith
yes.
care to comment?
Can you hear me?
There we go. David, how are you, buddy?
Oh, pretty good. How about yourself, Chris?
Fantastic. I mean, how could you not smile when silver was down 50 cents? It's down 50 cents. Now it's higher. We're debating who's filming Rambo in the White House. I mean, it happened, whether whoever did it. And then we see, and would you agree with that? Where, I mean, this is just inflation adjusting to that high. That wouldn't even say like, all right, but theoretically, then you'd have to tack on the additional debt and money printing burden. Would you not say, sir?
No, I agree. And, I'll be happy to see 50 or 60 on the way up to whatever that upper number is, getting us out of the rut we're in now. But I really believe that we're going to see extremely high prices, and I think they'll surprise just about everybody. silver likes to paint really ugly looking charts and then all of a sudden turn around, and it's a master of doing that, you know, even beyond any manipulation theory. So it's a little discouraging right now, but when you look at many of the miners, how they've held up pretty well, all things considered, and a lot of them are making money, good money. So I think if we've gone through a lot of the pain, get ready for some of the gain, as Rick Rule would say.
Yeah, and I mean it's interesting because, you know, we're humans, so we're biased by the past. So we like, even me, and we're like, most of the time we're talking about $50. Wasn't $50. Yet we just saw Bitcoin, let alone a couple of years back. Bitcoin just went up 13x in the last year. I saw Matt's head, like he's like, no, that couldn't really be true. I see you there, Matt Carr. 13x in the last year. Matt Carr, how much do you think Tesla is up since the Fed started the swap lines a year and a half ago in September? Take a guess. Although I'd probably have to recalculate it because it might have added a few more X's since then.
I'm not sure where they're at from the swap lines. I know since their convertible bond issuance, they're up like 12x because they also did the split.
Come on, buddy. It's like 18 or 19 now.
Yeah. So it's been quite a run in both of those assets.
Yeah, and it's also interesting when you look at the psychology of people, especially in today's, or I don't know, maybe the markets have always been short-term, ADHD focused. Yet it's like normal. Kind of like the housing market was like normal. Like, oh, we'll just go up 15% next year because it should, you know? Doesn't matter if interest rates are 7%, and that therefore makes the new greatest career. You do realize that I'm not speaking to anyone in particular, but just know that if home prices go up by 15% per year and mortgage rates are only 10%, then you have the new career of just buying the biggest home you can, because the more expensive it is, the more you make. Your $1 million home goes up to 1.15. You pay 100 in interest. So that's the stuff that, I don't know, maybe that's normal. I mean, it sounds like the things people like giggle at today is the same thing they were giggling at in 1929, where, you know, manias and money printing bubbles do what they do. But I mean, again, it's normal to people that these assets like go up 10x and they're like, how come it didn't go up more today? Yet when we talk about silver, it's like, get out the alien. Oh, there's the alien hunter talking about $50 silver, let alone 3x to 75. Okay, let's call the asylum, lock them up now. Where, I mean, look at some of these texts, like the fucking stock market is back to all-time highs. And the only thing that's happened since last March, I mean, Powell still tells me that the thing is a tinderbox and his business is closed, I guess. So, so I say that to point out, see, even the stock market up 3x since 2000. It's silver's half of its 1980 high. So I don't know. I just wonder. I mean, there's keep in mind, hopefully this comes across. I very rarely say like what I think the actual prices of silver targets will be. Because, you know, I understand I'm doing a show and it's important to me. Like, I don't want people like going blowing themselves up but I mean, if it was $50 in 1980, and then you've had all that leverage in the big silver short, I asked a bunch of people what they thought was the number of claims. By the way, that's a future roundtable. David Smith, you want in on how many claims are there for each ounce of silver?
Well, it's pretty phenomenal, you know, and I was just thinking, when silver does get up into the $50 area, I think the disbelief will be as strong on the part of investors as it was when palladium went above $1,100 after dropping down to 900 and going back again. And the next thing you know, it kept advancing to almost 3,000, and it's been around 2,500 for a couple of years. So if the build out in the EV vehicles takes place like the Silver Institute said last week, where they're talking 90 million ounces demand by 2025, which is most of that is new demand that isn't there right today. You could see it elevated for quite some time. It may not just be a spike that goes up to a couple hundred and then comes back down to 40 again, you know. So I'm sure there'll be a lot of chills and spills on the ways and a heck of a lot of surprises.
I mean, if you told me like one day it's into multiple, I know there's a psychic that was on John Claude's show that said it goes to 600 to 800 in March, then comes back down to 400 and then goes no offer. I'm like, yeah, that'd be fun. But I mean, in fact, if you told me that happened, that's because I guess what, you know, and that's the stuff. It's like, you know, especially like I really like to be careful of how I phrase things. But I mean, it's like on the other hand, it seems pretty damn clear at this point that these guys are going to hyperinflate this thing. So it seems like they're not like any period in which it was like, well, maybe they'll slow down a little here. We won't have outright hyperinflation. To me, we've blown past that point. I have a hard time seeing anything out of the political system that indicates that that's not where they're going. I mean, it's hard for me to see that. So anyway, and hello.
Well, it's like, you know, what Jim Ricketts talks about, that snowflake, that last one on the edge of a precipice of snow that creates an avalanche. And, you know, where that is hard to say. But the point is, I think it is in our future. And once it gets going, why, it's going to be pretty amazing. And that's why it's such an asymmetric trade. You don't have to mortgage the house. You're better off with a smaller position that you can sleep at night no matter what it's doing.
Yeah, but David, with 0% interest rates, if there ever was a time to mortgage the house, this could be it. Although, no, don't anybody do that. That's possibly true, but I'm just trying to be funny. It's kind of funny.
I'm looking at a home mortgage right now, 2.3% for 30-year fixed, which is just hard to imagine, really.
Yeah. So anyway, with all that said, now some of the reasons behind this and some of the things that cannot be shared on YouTube. Well, by the way, if we have any other YouTube creators on there who got censored, we got it solved. Rob, I can't wait to tell you more about that one as I check raise you with a crafty hand that you're not expecting in the poker room. But can everybody see the option calculator sheet here? Somebody say yes, please, if you can.
Yes.
All right.
Yes.
Okay.
Yep.
Cool. So I know a lot of people have asked for it. And if you may notice, it looks different than it did on the show the other day. I was playing around with it while I was on my couch. So I think it's close to being ready. And again, I'll go through, I'm going to try and keep my part as brief as possible, and then we can open up and take some scenarios, because obviously there's a million ways to do this, but I'll see if I can explain what we got here. Rob, can maybe you be my co-pilot? So I'll just often say, does that make sense? And tell me if it does. Hopefully I will explain these somewhat eloquently. Sound good?
Sounds good.
Or as T. Harv Eker said, yes or yes. Anyway, so what we have here is my little calculator. This isn't anything rocket science. And yes, soon I will send it out. If you're not on the option list, email Arcadia at Miles Franklin to get on the option list. If you got an email tonight, then you're on the option list. But this is a little calculator. Green fields are inputs. Yellow, do not touch. Teal, also do not touch. Teal is the fun part. So if you don't feel like listening to me right now and you just want to look at like some of the exciting things in teal, that's fine. I understand. But so essentially, you know, my school of thought, I think at some point we're headed towards the end of It's a Wonderful Life. As the Tyler mentioned before, hey, maybe it happens over a day, maybe it happens over a year. So again, you know, the point isn't, I'm not telling that I know the answer. I'm just, here's how you can put whatever parameters you want in there. And what's fun is that we can even put a scenario where, I don't know, let's just say there's ruckus and silver. I mean, you could, let's say there's, you know, nothing happens wild with Trump and just, you know, the thing goes in. But I mean,
But they also stopped me from uploading for 7 days, and I have, here's Sunday. I have Sunday, Monday, Tuesday, Wednesday, at least Wednesday, that I can't upload anything. So I have to go to another player. Remember, I did the test I did with Daily Motion. They put commercials in.
Someone mute. They have something on in the background there.
Greg Hunter.
I'm using a Daily Motion player.
Thank you. All right. So what I would want to see if I were watching Daily Motion is that, Rob, I mean, let's take a look at the silver chart. Could have guessed we'd do that tonight. Oh, wait, actually, look at that. This is perfect. Okay, so here's you see, Rob, you see my 30-day chart and a whole bunch of these here, right, on Kitco?
I do.
So here's January 5th to January 11th. So less than 1 calendar week, silver went from $27.50 to $25. So it dropped $2.50, right? Mm-hmm. So, here, let's see, we saw silver go from 25 to 27.50, went up $2.50 over, I don't know, the 22nd to the 5th. So 2 weeks, came down in 1 week. Here we see 20. Oh, that was back in July. But I don't know. I mean, you could even have like silver move $2 next week when just on random volatility. So one of the things that I like to do, regardless of whether I'm looking for something, and I don't often do weeklies like I've been mentioning in this call so far, but this is an occurrence where, I don't know, this just seems to me like an educated, like a good spot. And I look at it, if I see spots, if I pick 10 spots I like, I might only need to win on 1 or 2 of them. Say you take $10,000, Rob. You can do this with junior minors or option positions, but let's say you take $10,000. Steve Mueller is coming back on. Steve Mueller, I hope you're there. You're going to want to hear this, because if you take $10,000 and you say, I'm going to make 10 individual $1,000 bets, and if you get 11, if you lose 9 of them and they're worthless, but you get 11 to 1 and you win 11,000 on 1 of them, you still came out ahead, right?
Right.
So essentially, yes, I mean, I'm looking at this week, but it's not like I'm never going to trade again. So the more that you look in terms of adjusting your bankroll to your sample size, I mean, so in fact, one thing I might suggest for a lot of people, try option trading. Do it with 1 lots or small amounts that, anything you do, you're going to learn, which I think is good. So, I mean, there's a variety of ways to win. You can, again, we're going to go through how you can use whatever inputs you want. So you can just look at how the prices look. But anyway, I laid out why I think this is, spent an hour and a half laying out why I think this is an interesting week. So let's say that, fine, we'll leave aside like Trump doing anything wild. And we'll just say that, Rob, we'll say silver goes up $2 and First Majestic silver goes up $3 on a $2 silver move. Does that seem reasonable? I'm not saying that's going to happen, but give it, it's not like too wild, right?
Yeah, sure. I'm with you.
So here's First Majestic. Wow, First Majestic was $14 like a week ago. Amazing. See, that's the best part. If you live in a world where everyone is addicted to the short term, but you have any degree of patience, you can really monetize that, which if I do this properly, we will be experts in by the end of the evening. So here, 1 month. So there is $14.23 on January 6th. Today's the 17th, almost the 18th. So went down $3 in 2 weeks. So again, not to say that it's going, but is at least possible when we're extrapolating reasonable probabilities. Rob, makes sense so far?
Mm-hmm. I'm with you.
So if it went down on no particular news, it just got hammered. I mean, here again. So put another way, let's say you had put a weekly or 2 weekly trade on here. You know, if you happen to buy here, you know, you probably would have done all right on that way up. You don't have to have the COMEX implode, although because it's fun and glorious to think about, we will also price in what it looks like when the COMEX does implode. And that's where, for anyone who's listening, they're like, oh, I'm a little tired, or an hour and a half in, but I mean, you know, it gets quite intriguing. So, Rob, we got 25, we'll call that $25 silver. So let's say we said silver's gonna go up $2, right? And First Majestic's gonna go up 3. So that would give us $7 silver and $14.81 First Majestic, right?
Mm-hmm.
So I'll put that in here in my spreadsheet. And what do we say? 14.81. Okay, just to explain what this means, I'm for now just going to say this is our outcome. But what this thing has been designed to do is, let's say I wanted to, this is basic, your basic premise underlying your Black-Scholes and fundamental option pricing theory. Rob, remind me to tell you later the time the guy derived Black-Scholes from the beginning. This guy Susquehanna came in the room. He's like, today we're going to drive Black-Scholes. I was like, it was like about 30 to 40 seconds in, he's like already using Greek notations I didn't even know existed, let alone what they mean. And it was one of the most, it's like, okay, but we can simplify that. Fortunately, you don't need to know any of that stuff. Let's just say, and actually this is what I like to do at times. So you can make it for any given period. Let's say a year from now. Again, these are my assumptions. Everyone can, I'm sure, and you'll have the sheet so you can plug in your own. But I think probably there's some chance that silver is sitting right between 25 and $30. Maybe we'll call that a 30% chance that they just drag it out, just still sits there and nothing happens. I'd say maybe there's, let's say, a 30% chance the COMEX loses control, and we'll say, in that situation, we'll say silver goes to $60. Rob, what do you think First Majestic's trading with $60 silver?
Oh, man.
David Smith,
$30.
If you want to chime in on that, hop on in too. Huh?
I'll listen a little bit more here. Go right ahead.
David, I don't want to put words in Mr. Morgan's mouth. I believe I asked him once at $50 silver what he thought First Majestic would be. I think he said 100. Do you think that sounds like what he would say?
Or
does that sound reasonable? Possible. Let's not speak for David when he's not here. I don't want to do that. But
I think
Rob,
it's very possible that it would be. And you know, if you look at first
on a cash flow basis, does that make more sense?
Well, it's beyond that, because it has to do with the narrative and the perception of a changed company. And if you look at what Keith has done, and I own First Majestic, but they announced with that new HIG operational machine where they can grind the silver and get much bigger returns than they had been. It's like picking up $100 bills off the floor. And if the tax issue goes in their favor, if it doesn't, they're still going to be okay. It's just, it'll be more muted. But if it goes in their favor, it could be another Silver Wheaton where you would have a doubling within perhaps a few weeks of the share price. So it's really a powerful company, you know.
David Smith. So what does, okay, two-part question. Do you think in the next 5 years, we're going to see $60 silver?
I do. I think we could see it in the next 18 months.
Okay. And what does your gut tell you that the day that we see $60 silver, what is the price of First Majestic that day? We won't publish this anywhere. You're just giving a wild guess. No.
Well, you know, during the 2016 run up, and I can stand to be corrected by anyone here, I think it hit around $24 or something, $24, $25. And that was, you know, with silver prices considerably lower than they are now, physical silver. So it's the most heavily traded silver company on the NYSE, and it has the greatest, one of the greatest betas to the price of silver. So it's not just the price of silver, it's the implication of what people think that's going to do to the company and where silver is going to go. So it has several metrics that go beyond the question you just asked. Does that make sense? In other words, it's a
gut reaction. What do you think is going to be?
I don't think $75 would be out of the question,
right.
Even if it's a spike.
Okay. Yeah, I agree with that. And you have to factor in the shorts would absolutely get crushed in that case.
Right. It has a big short position, so they would be getting trampled. And, you know, it's really a quality stock. There's one or two others that have, believe it or not, I think they have a similar price movement to First Majestic in terms of percentage moves, but they are not as widely followed. But everybody knows about First Majestic, so it's the go-to, and the spread is usually, you know, 1 basis point bid ask.
Okay, and you see down here, and that's actually a couple people wrote in wanting to dig into the First Majestic short position, which we're setting up a show where we'll cover that more. But here you can see 23.9% of float shorted. Actually, it's been getting higher. So, Rob, we can dig into that more another time. But I guess what I would look at it, obviously, a lot of the people that bought the miners weren't having too much fun that last year. Well, they're watching silver going from 18 to 28. Check this out, Rob. So even like when COVID was starting, let's say February, we see First Majestic on January 31st, $10, right? And check this out. It's so special. Let's see. 1 year silver chart. So when silver is $18 before COVID, First Majestic's $10. Actually, I'm going to skew my numbers a little bit to cheat, but you'll see. Let's go back. You see, it was a little higher to start the year. So here on December 27th, the peak of that last rally. Oh, wait, no, that's the wrong year. Here, this one we see there. First Majestic is $11.97 on January 29th well, not last year anymore, 19, right, Rob?
2019.
So, and we look, and silver at that point is still, there's January, it's still $18. So silver is $18. It went up still $7 higher since then. And First Majestic, you know, if I pick the peak, it's actually lower than when silver was $18. David Smith, do you see that?
I do, and I just went over to the chart.
And actually, David and Rob, if you could comment on that for a moment. I'm going to use the restroom and be right back. So you...
I have a question about the price to earnings ratio.
Just under $27 in 2011 when silver hit high about $49. So First Majestic under $27. I'd argue but now they're worth quite a bit more than that in terms of having 3 primary silver mines rather than a couple of additional silver equivalent mines. I think they're a much leaner operation, a much more profitable one because they're making record profits right now. So
yeah, they are. It's a lot different company it was back then, and a lot of their share price has to do with the short float.
Yes,
people betting against them, but that would go away, and I think that would have sort of a boomerang effect on their price.
Exactly.
I think long run too. Like you have a price to earnings ratio of 40 something right now. If this Capitol riots was so damaging to the Republicans, and we're going to see multiple Democrats in office, right, and a lot of QE, you're going to see that PE ratio crunch because the government's going to have to stop the inflation of commodities in certain places like gas and oil, where the miner uses a lot of that. A lot of the cost in producing the metal is oil, so they'll shrink it there, but they'll let the silver run, right?
Okay.
And I think maybe long-term, 5 years, 4 years, 3 years, we're going to see the PE ratio of First Majestic shrink a little bit.
And I'll add one thing into what you just said. I think when they go to the cryptocurrencies, they're going to let both gold and silver run, and because they'll have no reason to hold them down anymore. They won't need to manage it. So maybe that same 2 to 3 to 4 year window. I laud the management of the precious metals and the futures market is going to go away.
And even the counter of that, if they don't let it run and Bitcoin gets crushed, how many people are going to say, you know, for years I've been parroting this nonsense about, you know, gold is garbage, Bitcoin is the future gold. And then when they lose 50, 60% of their money, then they go, oh shit, I got an epiphany. Let me go here, right? You're going to see a flow of billions of dollars into this little door that we're already in, right?
Right.
All right.
That's ultimately where the money has to go. It's going to go to the precious metals eventually.
I agree with you, Rob, and I am back here. And
that was a quick bathroom break, Chris.
That's the commitment. I couldn't wait that much longer to get into some of these option probabilities. So anyway, this table here, you see, you can, so let's say I think there's 30% chance silver goes to 27. And I think when silver goes to 27, I can put what I think. Again, this can be any stock. We're looking at First Majestic. You can put any assumptions in here you want. This can be over any time length you want. This could be over the next week, the next day, the next month, whatever you want to do. Obviously, this doesn't even factor in the Vega, which would be the volatility impact. This is just, keep in mind, you can sell things prior to expiration. That would be more like a 7-year webinar to cover all of that rather than one-nighter. But basically, this could give you a weighted average. So here, the weighted average price of my stock, if you do this on a percentage basis, give you 39. And if anyone didn't quite follow any of that, don't worry. That's not important right now. But one thing, if you are using this sheet at some point in the future, you want to make sure that your probabilities add up to 100%, which you can see if this number here is 100%. If it is not, it's going to say 90%. Maybe I'll get some. Raheem, if you could, can you figure out how to make that thing change colors so that it does something like shoots off fireworks when it does not equal 100? So anyway, we'll leave that for now. So let us say that we'll just use one probability, ignore this stuff here. And let's say that back to what we're thinking over next week. Silver rally's $2. First Majestic, maybe I should put a decimal increase there. If that's really important. Well, no, we'll take the decimal increase out. And in the effort to make the world a better place, stop worrying about things that really aren't that important. We'll just say $15 instead of $14.81. So then what you can do is go to Market Chameleon. Will McBride, are you in the house? I saw McBride log in. There's an appearance from Will, the creator of Market Chameleon. Handsome guy you've seen on the show a couple of times. Will, well, if you're there, you can hop in. If not, or Adam. But anyway, this is his site that fortunately is great for options. So we'll pull up the option chain there. And because, there's a lot of flaws with Wall Street, certainly, but I guess it's kind of cool that basically it is a full service casino. So, they really will you can find somebody to gamble or make a market on just about anything. Rob, we're going to also invoke more random prop betting, and I'm going to encourage that in the Arcadia Club, which is going to be launched soon, and I'm quite excited about. But anyway, you see here, these are the expirations. So January of 2021. Now they have weeklies. Back when I started out, they didn't have those weeklies. Back when I was a boy. But now we have them, which is pretty cool. Which means that it used to be, you would only have one expiration per month. Just allows you to be more specific in your bet. So I can actually look at this one, which expires January 22nd. So that's basically end of next week trading after the close on Friday.
So if you look back at our model here, so we say, you know, maybe First Majestic, I see it go, the chance it goes to 15. So if that's the case, then I can look here and say, hot darn, 14 lines offered at a nickel. Oh my God. And actually, these are Friday's closing prices. So you have a weekend of time decay. And I am personally hoping silver is much lower tomorrow. I mean, these I'll bet when these babies open, the 14 line is a nickel. Geez, the 13 lines, 11 cents. I mean, I think if you just like, Rob, if you just played this situation 10 times after, like, if you just wait till the thing gets smashed, I mean, it's different than like a couple of years ago where it would get smashed and then it would sit there for the next, 4 months or something. Now, I don't know, if you just like wait till it gets smashed $1 or $2 and then just put on something in some form of that. So you can even buy like the 13 line. So basically you buy the 13 line, your break even is that if First Majestic ended at $13.11, that'd be your break even. So that'd be a $1.28 rally in a week when there's troops being called in.
I actually did Google that if an insurrection is actually done and the market is closed, your option will continue until the market reopens for a day.
Okay.
So if you miss the expiration date, it'll still be owned by you.
All right.
Exercisable.
All right. And so anyway, you see here, so that's how you can look at these, where you can just calculate even without a spreadsheet. You're paying, this is the offer here. Here's your strike. So you have the offer to buy an option for 11 cents that gives you the opportunity, the option to buy the stock for $13. So if I buy this option for 11 cents, I have the right to pay $13 for the stock. Now, when the stock's $11.83 on the open market, I'm not going to want to pay 13 because I can pay 11. Oh, Tony Elbows is entering the room. And all right, so pay 11 cents. You're not going to, it's out of the, it's not in the money yet. It's out of the money, that 13 strike. But if First Majestic goes to, what do we have it on our sheet here? Why is my Zoom kind of freezing? One moment, folks. Let's try this again. All right. So now if First Majestic goes to $15 and you have the option to pay 13 for the stock, of course you're going to do that. Even if you have no opinion, you don't want to hold the position anymore, you can buy it for 13 because you have the option to do so, that you bought this 11-cent insurance premium that says stock goes over 13. Then if it's $15, you can buy it for, you can exercise your option, which means you're going to buy it for $13. And on the open market, you simultaneously sell it at 15, which means you made a $2 profit.
Hey, Chris, just to recap, do you add in the 11 cents to the strike price? So it'd be, you're in for 13.11. Is that right?
No, I would not say it like that. Because you're only going to pay the $13 if you're getting back more.
Right. I'm just trying to figure out what you're all in for.
You're paying 11 cents. If the thing goes, if the stock closes at $12, meaning your 13 strike is out of the money, you're going to do nothing. If the stock goes to $14, which means your 13 strike is $1 in the money, yeah, you'll pay 13, but you can like say like, all right, and I'll collect my 14.
Right.
So it's good when that happens. Don't worry, that's not list of things to worry about in life. That's not one of them.
Now, I have little experience with short-term options. What if that day, like
Tyler, can you hang on? I'll let you know when we're going to take some more questions, but if you could just hang on for a bit, please. So that's going to be the same, the 14 strike. Your break even will be 14.05. But let's show the good news here. So, all right. We are looking, let's go back there. All right, so we'll look at the 13 strike first for 11 cents. Keep in mind when it opens tomorrow, unless First Majestic's up a little bit, it's going to be even cheaper than that. I'm going to buy some now. So 13 strike. Now, fortunately, I think I got my formula right. Let's see. Ooh, how glorious. Yes. So as I change my input up here, that weighted average price 15 carries over there. So those yellow ones you don't touch. So Rob, if I own the 13 strike and the thing is at $15, that means my what is referred to as the intrinsic value or parity would be how much, sir? Rob? $2, as you see down here. Intrinsic value, that is not the option payoff. So again, for everyone who's saying they want the spreadsheet, this is why I've not sent it out yet. I want to make sure all this stuff. By the way, there's a nice big disclaimer here that I'm going to send it out. I'm going to put a lot of effort to make sure as certain as one can be and have a couple of people proof it. Keep in mind, spreadsheet links get busted. Always check these by hand. Don't be like mortgaging your house on something where the difference in a calculation is going to do something that we don't want to deal with. So, so Rob, you see $2, the intrinsic value, right? So if we paid 11 cents for it, there's the option price. And we'll say we invested $1,000. Actually, you know what? Let's say I'll bet, the offer is probably down to 10 cents, which would make the math nice and easier. So keep in mind when you buy an option, covers 100 shares. So what I do, this little trick from trading on the option floor, I just move the decimal point over. So 100 times a dime comes to $10. So you just move that over 10, then times 100. You get your 1,000 invested. So basically, if you say I have $1,000, I want to risk on a trade like this, and the option price is 10 cents, you get 100 contracts. Rob, does that make sense?
It makes sense so far.
All right. So then here is the fun part. Because you are talking, we're laying out a scenario here where you paid 10 cents for something that became worth $2, correct?
Correct.
So that means your 10 cents was a how many bagger, Rob?
That would be a 20 bagger.
Yes, as is located in, maybe you should, I feel the bagger weighted average multiple, let's call it the bagger field. Very scientific. Rob, I feel like this is so glorious we should make it a different color. What do you think?
All right.
What color do you want, Rob?
I do orange.
Huh?
I would do orange.
Orange? All right. Orange for Rob's profitability. We'll even put a nice border around it. I think that would look snazzy. Yeah, look at, oh, no, that's the thin border. I like bolding the border. Yeah, just get like a little wild, really. A little crazy here. Come on. Yeah, look at that. Ooh, oh, we got to get there around there. You thought that this is what they'd be doing on a Sunday night tonight. You never know where life takes you. But the glorious news, I think it's that special that deserves a boundary, because that's a 20 bagger. So essentially, let's say, in other words, if you staggered your bet size appropriately, if you picked this spot 20 times and you were right 1 out of 20 times, you break even. I would say with what's going on, and that silver, doesn't move logically, but it, it's gone up from 29 down to 22. It's gone back and forth like a ping pong ball. So I don't know. Again, I don't know what is appropriate for anybody on this call. I'm not you. To me, as someone who does stuff like this, it seems like a worthwhile thing to do, because again, here's the best part. So imagine like 19 times you lose $1,000, but on the 20th time you hit this scenario. Now, if you hit it 2 out of 20, then you would have 40,000 versus only putting up 20,000 in cash. So you would have doubled your money. That's why, to me, picking educated spots, and it could be someone has, maybe you just buy a 2-year option, and we'll look at one of those as well. But here's the best part is that let's just say that next week was the week that the thing finally moved. We won't go nuts. Let's just say it went up to COMEX ran into trouble. Let's just say it happened next week. We had $35 silver. So let's say that brought First Majestic up to 20. Thanks to leverage derivative math, you see that it's not a linear ascent here, because now, Rob, we're talking about a 7-bagger. And especially, like, for example, here's the glory of it all. Someday I'll tell you what I was doing in 2016 and why I completely missed this one. But this is what I'm still like wanting to catch here. When First Majestic went from 3 to 18, and that was when silver went from 14 to 20. So again, the reason I showed how First Majestic is still down, is still lower than at some points when silver was $18. It seems kind of like a coiled spring on top of a coiled spring. So if silver suppressed, I would assert First Majestic is suppressed even relative to silver. Now, the downside to that is that when you have things like last year, you can have silver move a lot, and if you have options on mining shares and the mining shares don't move, you didn't win. Now, if you had had those options on SLV during the move, then it would have gone great. But counterbalancing that, at least what I'm hoping for, is that like when silver moves like some break point, and I would think there's a lot of pent up energy in some of those mining shares. So, again, you go back to, where did it go? Let's say for someone who thinks we'll see $50 silver in the next 6 months, and let's say we had $60 First Majestic. You go back here, let's say we're looking at the Julys. All right, so obviously these are going to be a lot more expensive. You're going further out, but we'll look at the 25 line, which is 28 cents, let's say. So option strike 25, whoops. Strike 25 strike is 28 cents. And First Majestic went to $60. So there, basically, the more specific you are with your timing and you get it right, the higher the multiple. If you can have a longer policy, which is great, if your multiple goes down because the price of the option goes up. Yet still here, basically, if you got a half-year policy, that 25 line, and you see a $60 First Majestic, then your $1,000 became, Rob, how much? Rob, it became
125,000.
Yeah. So you got a 125 bagger. So basically, maybe I'm going to get my old clerk from the New York Stock Exchange on the show one day, and he can tell stories of what it was like in 2011, watching my mood swing between, I mean, this was like, it was kind of in this territory back in 2011. So I don't remember too specifically, but I'm guessing on May 1st of 2011, when silver came from $49, I think down to 42 overnight. I probably wasn't a lot of fun to be around that morning, but that's you get used to seeing numbers go big and small quickly. But let's just say for a second that why we had this whole original part of the call. Let us say that let's say that Q is correct. Trump is essentially going to do something that is probably would be wilder than the collapse of the Roman Empire, but it's going to be packed into one afternoon. So let's say that, I mean, and again, I can't tell, I wish in fact, what I've studied last year is to be as prepared as possible. So if there ever was a situation where it's like, all right, I know when it's finally going to happen. This is what I've been preparing the last decade of my life to do. And I can't say that's Wednesday, but certainly Wednesday is the type of day you would think. So let's just say that, you know, the $50, let's say silver was $50 this week, just so you can see how the math looks. And then perhaps even more importantly, because, you know, even if it doesn't happen this week, you know, you start seeing that same process of looking, if I do this one out of X number of times, how does the math back out? I mean, you can back this out. You can put this on for 20. If silver hits $50 in the next 20 years, you're still getting wild multiples. But old Werner Wolf, let's go to the videotape. So there's the 22nd. Wow, can't believe so let's look at let's say I think I bought the 15, I bought something the other day. I think it was like the 15 line for 3 cents. Got a couple of those on Friday, which made me smile. Let's say that's 2 cents. Let's say the 15 line is 2 cents when it opens tomorrow. Whoops, that would be, so we'll go down here. And I think that's pretty possible. If anyone, Matt, are you okay with that assumption that the 15 line could be down to 2 cents, especially if First Majestic's down tomorrow? Yeah. Offered at 3 on Friday, could be offered at 2 cents.
Yeah.
Just due to the weekend decay and how, I mean, again, when I was trading, when I was a specialist on the floor at the end, I had 600 symbols I was monitoring. It's like most of them, I couldn't even tell you like what the symbol stood for. And a lot of it, you have it on autopilot algorithms. So let's say that the 15 line went down to 2 cents. So that means in a simple way of doing even better, you don't even need this spreadsheet. But remember how I said you can move the decimal point over. So just the simple math, you can do this on your iPhone. Just move to calculate your multiplier. Oh my God. So move that. So 2 cents becomes just 0.02, make it 2. And 1,000 divided by 2 equals 500, right? Rob, can you check my math there? 1,000 divided by 2, last I heard, is equal 500. Even I think I can still get that one right.
Yep, still is. So
obviously the chances of First Majestic hitting, or I don't know, maybe I would assert that the chances of First Majestic hitting $60 this week, I think what I would say about that is that I could write a book about my thoughts about it, yet I would say that the probability of that happening, I feel pretty confident it's higher than what the average, even the average silver bug, let alone the average Wall Street participant, is factoring in, based on the fact that the most likely scenarios that I've been able to come up with, and at least have been discussed so far tonight, are either that Trump and Pelosi are friends, or B, that they have leverage on him, or C, that he's just going to whimper out after everything that we've just seen happen. So anyway, please, I think hopefully the context is clear. We're just looking at the math of what these will be. And as you can see here, your 1,000, if you had this scenario, your 1,000 there gets a nice 2250x multiple and would be 2.25 million by the end of next week. Come on, baby. Like, come on, Q. Come on, Trump gold standard. So now again, I think it's only appropriate to factor in that in that type of scenario, if there was an overnight reset, you know, some of these numbers, I mean, does the OCC, which is basically the, you know, like how they say FDIC guarantees your bank deposit. I mean, is there at some point where the exchange blows out, or I don't know, do you fully get paid on this? That's why, you know, with a lot of these investments, I would, one thing, if I may pass along, that I have a TD Ameritrade account. I don't know anybody there. Maybe I should print out my statements. I have a number on a screen. So if the internet goes down and like all heck breaks loose, I have a number on a screen. I have my mom's account at Sprott Global, which I guess is better because I know Rick Rule. I know my broker there. There's someone, if something happens, they have lawyers. They have, you know, I don't necessarily have, I can call Rick and say, hey, what's going on? Your lawyer's on it. So, you know, one thing that I've thought about, especially if you have stuff that you're planning to hold for the long term, again, this is obviously going to be specific to each person, but maybe even considering getting these stock certificates. Certainly a lot of these mining companies, you can call and meet these people. If you're a big shareholder in one of these companies, call up the investor relations, just say hello once, say, hey, I'm a big shareholder, like what you guys are doing. And you know, I have no idea what's going to happen, but just, you know, so you know I exist, or do ask them. I've asked the Mark from First Majestic about the share certificates. I think it's one of those things, there is a fee, so you don't want to like buy a share, get a certificate, buy another share, get a certificate. But, you know, if you have like $500,000 worth of First Majestic, call. I don't know the exact answer, but that's at least what I've been thinking. Again, you know, some of these things, you know, we don't know how it, like, what's happened by if this occurs, you know, is it the market's functioning? Is electricity on, or we at war? So there's some degree to which, you know, it's fun to play with these things. And, you know, I think, I don't know, someone was asking on Twitter, is it better, like, if you have a base position in metals, to get American Eagle coins or to get bars that have less premium? I mean, you know, probably the premiums would soar. It's like, as long as you have silver, it's like we're worrying about, like, would we get a 2,000 multiple or a 2,050 multiple? I mean, it's like, sure, have fun thinking about it. And in fact, enjoy thinking about it, and think about it and discuss these things, because really, anytime we're doing that and you're thinking about it, your mind's thinking about the different possibilities, that's how you learn. That's how you become prepared. Reading this great book by Bill Walsh, the guy who was the coach of the 49ers. And it's like, he would think through the scenarios that the other coach wouldn't think of. So when it's in the fourth quarter and something happened that wasn't according to the plan, you know, he had an edge because he had spent the time to think about it, you know. And I mean, if this feels like homework, or your eyes are bleeding and you're bored shitless right now, then, you know, maybe it's not. But if it's intriguing, it's something you have fun enjoying and discussing or thinking about, asking people about, I think even if you just do this, don't put more money than any dollar more, or don't put any money if it's not risk you can handle. But if you find this interesting, trade one lot. So it's like your two contracts would cost you $2. You know, and just you'll learn more by doing, Now, if you mix doing with some education and thinking and reflecting and learning from people who are experienced and understand something, then it's like that right balance. But, you know, you also want to be careful. You don't read like 1,000 cookbooks without ever cooking a meal, where you know, it's somewhere in there, that integrative balance, which can be handy. So anyway, the point I'm getting at here is, if you have anything on during any period when, like, the COMEX, if the COMEX does break or there's some fracture and we're still able to get paid on our trade, you win big. So, you know, you put it in the lottery ticket category maybe, and I mean, it's, you know, I would say for most people, start with metals or shares. Matt, something I've wanted to talk to you, maybe we'll talk more about this week. Been thinking, you know, again, I don't know, depending, like if someone has an income or a business that feel pretty confident about going forward, you had a certain size portfolio, I'd wonder what a true good comparison between, for someone like me that feels pretty confident, when I sit there today and I think, is it possible that silver is less than $50 2 years from now? Now, certainly it's absolutely possible. So let's say that first of all. But I mean, when I think of like, geez, you know, of all this stuff, I mean, to me, I think there's a high chance of that. So it's almost like on some level, because I guess addressing some of the earlier topics, and I know a lot of people have some asked about it. And let's look at, if you go as far out, if I'm really pretty darn confident that this thing can't last 2 years, if there's ever been a situation where even if I should sell some of my mining shares, which there's no time limit, but I don't know, do I feel confident enough that rather than holding majority of my mining shares, I'm thinking about it anyway, if I just bought the First Majestic, I think these widened out. I think he was like offered 235. So let's call it 230 the price. We'll take this, 225-ish on the 25 line. So this is a 2-year option. It expires January 20th of 2023. So I could buy this. I guess what I like about it, yes, you know, and I think, again, to the earlier point, there's no set answer. You can mix and match. You can do whatever you like. You don't have to do anything. I'm not telling you to do anything. I'm just laying some different possibilities out. But, you know, we looked at, here's the ones expiring next week. Here's the ones here. Because I walked through it in the call on Friday, and I was just thinking, that's interesting. Let's call these 225 the price on the 25 line. So let's say option price 225. David Smith, 2 years from today, what's the lowest possible price you see First Majestic and silver being? Is David Smith still there? All right. Rob Keynes, you want to take a crack at that one? What's the lowest you see silver and First Majestic being 2 years from now?
Silver, $30. First Majestic, $40.
All right. So $30. First Majestic, we'll call it $40. So Rob, if First Majestic's 40 and you bought we're looking at the 25 strike, we're paying 225. You have the 25 strike and it ends up 40, the intrinsic value or parity, the option's worth how much?
15.
Right, which we see down here. And if you paid 225 for it, who knows how to calculate without even looking at the spreadsheet? Rob, how would you divide the math here? 15 divided by 225, right?
Mm-hmm.
So if anybody's got a spreadsheet or a calculator, I know that, I know you maybe, right? But actually right now, just calculate it even if you see the math here, but going through that step will begin wiring subconsciously. You know, you'll remember it a little better in case one day you want to look at something like that and you don't have the math. So, so you just 15 divided by 2.25, and I will check it. Even after doing this for years, I always somehow like, am I doing that right again? But 2.25 equals 6.6667. Again, all right, maybe I'll increase the decimal here. 1. And there, we'll do that. So even there, you know, and Rob, I asked you your minimum, but even with those parameters, if First Majestic got up to $40, you have a 6.67 multiple. So in that scenario, you had the 2-year insurance policy, your 1,000 became 6.667 thousand. Again, let's say we get the wild scenario, and that's perhaps the best part. It's like, because you're down there, one of the things I like is that your downside is capped, but let's say we get something crazy. Let's say we have $100 silver by then.
I think it's crazy to assume that silver will only be $30 in 2 years.
Well, okay, I get that, but let's say we have 100 for both of them on the leaps, then your 1,000. So, I mean, I would say, like, to me, for most people, like, if you didn't want to get too clever and you took $1,000 and you bought 4 contracts and you looked at it like, hey, I have an insurance policy. If I'm wrong, my $1,000, I've spent it. But if things get wild, my lottery ticket pays off. Now you can decide for anyone how wild you think things are going to get. Your break even here is going to be 27.25. There's your strike plus the premium. So if we go to, all right, maybe I should make these 2 decimals. Guess that makes sense. Stop being stubborn. So there you go. 2 decimals. Yay. And so there you see at your break even 27.25. You would be getting a 1x multiple, means you get your money back. Now keep in mind, you do have a sweet spot. So even if you have the 25 strike and you paid 225, let's say that silver goes to 26, you're not going to win, but you will lose less because it's still in the money. You paid 225, parity's $1, so it's worth $1. So I mean, you don't, you know, keep in mind you can have options where it's the derivatives. So you get the extent, you get the exponential factor. So here, you know, if it's worth $1 and you paid $2.25, well, you lost $1.25, but better than losing $2.25, right? So, anyway, I guess that's, you know, and there's a variety of ways to do this. I mean, you could buy a thing every 3 months and roll it over, or, you know, you could look at any stock. I mean, not all of them have options listed. The bigger ones do, but I don't know. I would say even, you know, if you have like $100,000 portfolio and you took $1,000 and bought these and are okay with that risk, if you think in the next 2 years, let's say you had $30 First Majestic, you know, you'd get a double. I mean, if you think we're going to get the explosion price.
Yes. With UBI for sure.
If someone thinks they're going to get the explosion price, then at least that's how the general concept works there. And with that said, Rob, can you take over again? I finished that coffee, so I'm going to use the restroom again. We can open up for conversation. Anyone has any questions or discussions, but anyway, that's what I've been thinking about and looking at, the combination of the events that are happening. And then if you do think it's inevitable that the COMEX is going to be a tinderbox, is a tinderbox. Anyway,
I mean, with the letters being exchanged between the two of them and the 40 million people that are out of work, I think we're pretty solid in the area of silver going hyperbolic. When, I don't know, but over the next 2 years, I mean, that's a solid bet for sure. And if they do UBI, I mean, you're going to be given 300 million people, $1,000 checks a month. How much of that is going to go to silver? Right? Silver, we've got 80% of silver being used by industry, 20% is investment. If only a handful of the population of the United States starts to buy silver, and with all the green policies that the liberals of the whole world are talking about, Europe, Britain, us, the silver demand is going to be off the chart.
Yeah, I agree. And I think with the space economy, silver demand is going to be off the chart. I think it's quite possible that every single ounce of silver produced going forward is used for industry, and then investment demand is
gone. Yeah.
Yeah. It's going to do nothing but send it vertical.
Not to mention if we go to war.
Mm-hmm.
What would happen to silver then?
Well, so yeah, silver's a strategic commodity in that case, because you can't have weapons without silver, right? Yeah. Or copper. This is what happened during World War II. A lot of the key elements like copper, zinc, and some of the others, just base metals skyrocketed. But I think in today's wartime economy with today's weapons, you would start to see silver and probably even some gold, because they'd have to substitute gold in certain applications where they didn't have enough silver.
Yeah. And I think the other red herring for if you want to go long term is Bitcoin. So when you look at Bitcoin, the energy cost to mine Bitcoin is very high. And if we do have this environment, the macro trends point towards energy costs going up. When that happens, you're going to have a clamp down on Bitcoin, because it's going to cost more and more to produce it. And a lot of producers are going to go, it's not worth, I've made my money. I have a lot of Bitcoin. Let me turn off these machines because it's getting expensive.
Mm.
All right. Well, I want to open this up. Anyone who hasn't had a chance to ask anything, has any questions, want to stick around and handle that for a little bit, but also give people a chance to express who haven't had a chance to hop in yet. And also don't need to sit here endlessly either. So is there anyone else that would like to ask anything, or perhaps has a option question?
I have a bet, but it's not options, but it's kind of related.
Whoever is speaking, I can't really hear you very clearly. Can you get a little closer?
Yep. Is that better?
Yes.
So there's this contract called Trump Feb. It's on this crypto exchange called FTX. And it's currently less than 2 cents. And it says that it'll expire to $1 if Trump is president on February 1st. And so I can't really figure out how to get exposure to that contract, but it seems like a pretty asymmetric bet, like you were talking about.
Yeah, I'm not sure the particular contract you're looking at, but actually the way, at least one way of thinking of it is, this is how we would look at it back on the floor. If you look in terms of future style, like I say, like I'll pay 2%. So basically if it's 2 cents, it's trading at a 2% chance. If you're right, you get 50x. If you're wrong, so you're paying 2% for that insurance policy. So certainly if you're of the school of thought that you're pretty confident that he's going to be there, then, that looks like some good odds. Again, here's the thing that I guess I'd really like to continue reinforcing. I know I've said it before, but you don't have to bet the farm on it. If you just, I'm doing this myself, reminding myself to do it more, just notice spots where you think things are out of line and just make small bets more regularly. Then you get to win. And in fact, then you're becoming the casino. So, sometimes with the Fed funds, you can back out the percentages from the futures contracts somehow. I forget how to do it right now, but so it's like there's only 10% chance the Fed is going to do this. If it's trading at 10%, but you really think there's a 20% chance, then if you're finding spots where there's edge and you stagger your bet size appropriately, then the math is coming out on your side. Like if you're flipping coins, you win 51 cents, but you only pay out 49 when you lose. Well, if you're betting $1 at a time and you only have $10, you can be right, but get blown out in the short term. But if you have $1 million, you can bet $1 each time and you can do infinite simulations. Like, we can do this from the beach too. That's what the casino does. So anyway, hopefully that helps. And
I think there's an issue with that bet though. Maybe Biden might not be the president, but that doesn't necessarily mean Trump will be the president. So they can wiggle out of that bet if there's a temporary holding period.
Well, like in all sorts of wagers, and especially ones where JP Morgan's the counterparty, keep in mind. To me, that's what we're really pricing with silver. I think we stopped pricing the fundamentals a long time ago, but it's a lesson I got ample training on the trading floor where, just because the floor broker acts like a floor broker, which is kind of like a less successful version of a JP Morgan employee, and they do something that is technically illegal or clearly against the code or rules of the floor, does not necessarily mean that after it happens and you get screwed on it, that you're going to get a reimbursement check. So the Hunt brothers, I would say their thing was right, but if everyone is saying like, well, why would I manipulation this? You're playing a rigged game. If you don't like it, don't bet on it. It's a simple thing. If you feel that you're up for the task of gaming and pricing that and understanding how it's rigged and that you can come out ahead, I mean, I certainly think that can be done. That's what I'm sit here trying to be ready to do. But I mean, that's the downside you're pricing, and not the easiest thing to price, especially in the short term. Do I know that, the price of silver won't be $2 tomorrow? Of course not. But that's why I'm not going to like lever up to bet, but I don't know. Like I won't, whatever I put on something this week is not something that's going to like jeopardize, like, do I, have enough money to pay my expenses or take care of your family or whatever. It's not that kind of bet, but I don't know if if $10 isn't a lot to you, then fine. If $100 isn't a lot, if you have $2 billion and you put $1 million on it, it's going to be relative. And the point is not the size. The point is that if you get your money management correct, you will win this. If our underlying thesis is correct, no matter how long it takes. If you manage your money properly, you will win. If your underlying thesis is correct, which I think it is. I think we're all here because we think it is. If you manage your money correctly. If you manage your money correctly, you'll make a lot of money. You'll find that the people that you've seen who have already made a lot of money will say the same thing. We bring them on the show and you hear from them regularly and you've heard them say it. But if you go all in on 99.9% favorites, but you go all in every time, you're mathematically guaranteed to go bankrupt. That makes sense?
Yeah, that's a cool point.
So
I think there's something else to mention about that particular contract that he's bringing up. It sounds like it's a binary option which means only one of two things can happen. So you make the money, it sounds like, if Trump stays, you lose it if he doesn't. The options here that Chris has been discussing are American style options. So a whole slew of different price outcomes can actually take place, and you can actually exercise the contract before it expires. The other thing I'd mention about what you brought up, the exchange FTX, I know that's an offshore exchange. So when you're dealing with offshore exchanges as an American, one of the risks you should check into with that particular exchange is what is your recourse. Oftentimes, there are real problems with that. If an exchange runs into problems, you can have issues collecting, even if you are right about the underlying bet. So that's another risk. So anytime you look at derivatives domestically, if I think most people on this call are Americans, versus offshore exchanges, you should actually be getting better pricing when you look offshore because you're taking jurisdictional risk. So I would think about, can I make that same bet somewhere domestically? And if I can make that same bet domestically and it's a different price than offshore, now I have another trade I can make. I can collapse that spread between the two. Because in America, I can sue an exchange that doesn't pay me. In a place like China, or I know a lot of these crypto exchanges are in the Caribbean, you're going to have a really hard time getting funds back, even if you made a correct bet on an options contract. So there's like different ways you can manage those risks.
Yeah, cool. And I mean, similarly, if I have a TD Ameritrade account and TD Ameritrade gets blown out, you know, there's that risk. How do you price that? I mean, I'll leave that up to anybody to decide, but I think that is relevant to at least be aware of. I remember there was something when Lehman was collapsing where it was like, I forget exactly what happened, but there are plenty of reminders that trading is a science that if you understand the difference between what should happen, what you want to happen, what you think is fair, and what ultimately is going to happen, that'll save you a lot of money. So, anyway, does anyone else who has not gotten a chance to join in tonight still have a question here?
I have one, Chris.
Hello?
Can you hear me? I have one.
Yes.
From Sal. I want to know if anybody has discussed or thinks that a lot of this is going on before First Majestic has dividends. Because at some point, aren't the shorts going to have to be responsible for the dividends?
You would think. I mean, it seems, my best guess is, I don't know. It's like if banks can rig gold and silver, I'm sure it's even easier to rig First Majestic. And if there's ever been someone who would be a target, I mean, it would have to be Keith. So I don't know. I mean, I think there's also a degree to which a lot of the institutional folks are still remembering 2016, price came down. I don't, like, there have been times where there's been a lot of money flowing into silver in the last year in particular, but just look at how, like, when Bitcoin, once it was up like 13x, there was the guy on the Seahawks is like buying Bitcoin. They're putting him on, you know, the cover of CNBC and like, you know, like, oh, well, the pros are doing it, I got to get in. They got, you know, and so I don't think we've seen anything yet in terms of money coming into silver or to First Majestic. I mean, I don't know. How do you, it's like, on one hand, like, how do you sit there and short First Majestic given what we've laid out? On the other hand, I know that the people on Wall Street are not looking at it like this. It was there. Like, they're definitely not, even now, they're not looking at it. They've been trained not to look at it. That's what business school is called, you know? That's the training. So I would say this, to me, always fit the category. If you're making a bet against someone and you're saying X, he's saying you're wrong, you know, it's great if you think you're more right than he is. But if okay, I think I know why he's wrong, because it's the same people who follow Ben Bernanke and say subprime is contained. So I don't think they're spotting the bubble. And I think, you guys have all heard the reasons of why I think that. So at least if I'm correct and my reasons are correct and he's wrong, the blood is on the streets, I guess you could say. And in one sense, the more people who dislike an asset, that's great news, because the more people who are selling it. So for example, with First Majestic, I guess there's some funds, I guess, that can't buy First Majestic because there's an ongoing case. So that doesn't have anything to do. All right, well, there's whatever premium for the case, but if these guys are just restricted from trading it and the other ones would buy, that seems like the energetic balance is out of line for a reason that's not validly backed by the fundamentals. So the more stuff you find like that, like when you hear people say, like, I'm tired of the metals, I'm just throwing in the towel, I don't want to wait anymore, I can't take it. Well, they may feel that way. That, I guess if everybody felt that way, then yes, on some level that would change the demand. But if that's just one guy and the fact that people are actually buying physical silver and the money printing is going on and is never going to return, then okay, that means he's selling something. And the more people who do that, the better your pricing is, the better the odds you ultimately get. Now, can most people handle buying something, watch it go down, and be happy about buying more? Anyone can do it. Do most people do it? No, they do the exact opposite. And that's the difference between winning and losing, usually has been my experience, whether in trading, my own results, or the people that I've talked to. So, extrapolate it even simpler. Can you win? Yeah, if you can be patient, and if we're right and it's a Ponzi scheme in the government and everyone else that you think is delusional, and how do they not see these things if they're wrong? And if you can be patient enough, because we're waiting until they realize what you already know. That's the difference. Because like people often, they see a fundamental mispricing and think, all right, well, this is mispriced, I bought it, and it's not going to go up the next day just because you finally realize it. You're waiting for the rest of the world to finally, I think we're right. But when we really get paid off is when all these guys on Wall Street have been reading Krugman. They're like, shit, I got to get some shares. Shit, we got to find a fund. Matt, when your customers, you start getting people who, are watching silver go up on the ticker and they're saying, hey, we got to get some exposure. And you have people coming out of Harvard and Wharton and Sloan. They're 25. The hedge funds and the banks, they're going to get whatever the customers are requesting. And you saw it a little bit when silver was moving last year. The thing finally started moving. Then everyone's like doing it. Remember, there's like a month when it was moving and everyone's like coming out of the wood like, yeah, look at this silver stuff. And then they drop away. That's the human nature part. But look at what just look at what's happening with Bitcoin. And if we're right and that silver, it's an inevitability. So any final questions, anybody?
One thing to follow up on that question, with regard to the upcoming implementation of a dividend, the current shorts that are actually short that stock, they should be taking into account that the company is going to issue that dividend come at the end of, I think, Q1. And that will be a cost that they have to bear. So they'll be paying out that dividend quarterly. And they also pay a borrow cost, which I think right now is like 0.8% per year to borrow the shares.
Yet for locate, Matt?
What?
We're not into negative territory for a stock locate yet?
No, it's just
how wild would that be if you actually like short a share, you get paid a credit because it was a negative interest rate policy? Don't rule it out. Well, it's coming.
But yeah, it should take into account the dividend. Those people should be thinking about it.
It's theoretically priced in, but most likely priced in Wall Street fashion, which is, you saw how that works out in The Big Short. Imad, did you have a question? I see a hand raised. I just realized that thing's there. Sorry, anyone who's been raising their hand before. But Imad, if you...
Hey, Chris. I was just going to say we were talking about risk management earlier. And I heard something, Jim Chanos, he was talking about how he manages his risk. And he just says for any position he has, he doesn't have more than 2%. And if he really likes a position, he'll go up 5% as a percentage of his portfolio. So maybe that's just a good rule of thumb for maybe some traders in here if they're trying to figure out, how much their position size should be. So that was just my comment.
Yeah, well, thank you. And for some people, that's going to be great. I had to point out also that for some people, that's not the way to go. Everyone is different. And I think trading, like basically anything else in life, goes the best when your style is somewhat congruent with who you are. I was trained on an options floor by people who were professional speculators that, were like, hey, you take the single when it's there, but there's a time to go all in. If someone's coming from an actuarial background where that's a very much different mindset, where maybe more conservative to doing insurance or something different is probably going to be appropriate for them. I think what Imad just mentioned makes a lot of sense and could be, with that said, I think that could be, a good rule of thumb for people starting out. Just, I guess maybe that's the fun part of life. And I noticed how I've gotten any of the things I've learned to do somewhat well. It's like I like seeing a bunch of different people who are successful at doing it. Take different bits and pieces, and then you become who you are. So, like Matt runs his own hedge fund. So there's some stuff that's more sophisticated that is a great bet for Matt to get into because Matt knows what he's doing. I mean, any of the trades, you can always explain it clearly, but I mean, the real skill is that, all right, when the thing's getting pounded and you thought you're all clever, like, like all of us silver guys are like, oh, we're going to buy some silver. They're going to do QE 6, 7, and 8, and then silver's down $2. Did you have a plan in place that leaves you with the ability so that whatever you feel is the right trading decision with a calm-headed mind, and if that's a good plan, do you actually execute the plan? It's like the poker player gets pissed off and goes on tilt. Doesn't matter how many books you read about like probabilities or whatever. If you can sit there and get loaded at the table and just lose your shit. So I think it's a balance of all of those. It's going to be different for everyone. And perhaps on that note, I think maybe we will wrap up there and remember that sleep is good too, and trading is fun and all this, but also taking a break, getting some sleep, and more than anything, this was not by any means an advertisement for people to go speculate on this week's event. I hopefully what came across, I know, geez, we've been here, was it 3 hours already now? Just that whenever you see a situation that looks out of line, you can provide this same framework and thought process, whether it's whatever you think is going to happen this week. And by all means, I'm not, everyone's going to think whatever about Q or Trump or whatever, and that's fine. Hopefully this was at least helpful.
Something just came across my screen about 9/11
options and how you can look at those. So with that said, have a good night, everybody, and we'll see how this week goes.